But Prashant, we've got another guest joining in, Patrick Law.
Oh, no, absolutely. And, we're shifting gears from corporates to markets. Patrick Law is head of Asia Pacific, fixed income, currencies and commodities at Bank of America to decode what's happening in the fixed space, really, as far as India is concerned into 26. Thanks very much, Patrick. Great to have you with us here on the program. Prashant this side. So it's been a bit of a, write-off kind of year for India. A few years of very strong performance right on the top of the leaderboard in terms of equities. And this year, not so much. With regards to currency, if you compare it to other emerging market currencies, I think we are at the top in terms of how much we've depreciated against the USD. The general chatter and sentiment as we head into 2026, but these are forecasts, is that, well, it shouldn't get much worse, and maybe it'll get more constructive. What's the dominant driver, Patrick, to your mind, for India as an asset class into 26?
Well, from the FX point of view, the generally market expects a few things. First of all, interest rate differential versus the US. Number two is the balance of payment. And of course, number three is around the potential trade deal with the US. Unfortunately, the current account situation in India has deteriorated somewhat, swinging from a small surplus into a small deficit. And secondly, in terms of the capital flows, we have seen, equity outflows in India. So unlike back in 2023, there was a pretty good inflows into India. Last year was pretty much nothing. So the question is, among a lot of observers and also clients around whether, equity flows will come back. I think there's a lot of uncertainty around it because, the trade deal is still up in the air on one hand. On the other hand, the market overall is very focused on AI. And when we look at India, India definitely doesn't have a very big connection with AI. So I think from that angle, the equity flows, may face some challenge into the next year.
Okay. So you're saying, and what will a trade deal change all of this sentiment around? I mean, is that the kind of the lever which will have the maximum impact?
Well, I think the trade deal would definitely help with the sentiment because right now the swing has moved from generally bullish or cautiously bullish to a little bit more bearish, given all the factors that I've mentioned on interest rate differential and capital flows. In the end, even with a trade deal with improving sentiment, we really need to see material capital inflows coming back to India so that the currency can, reverse the current depreciation trend.
On interest rate differentials, Patrick, I mean, the general assumption here is that we are done with what we've seen in terms of the last rate cut in India. In the US, though, we've got, the President Trump, who's pushing for more rate cuts, is, potentially the front runner for the next Fed chair has said, well, there's a lot more room. Now we'll need to see how much it... But if they were to get their way and rates were to drop substantially into 26, that problem kind of becomes smaller, the rate differential problem?
I would agree with you. If the US continue to cut rates while India holds rates steady, it would help support the Indian rupee for sure.
But you don't see that as a you'd assign it some probability to it, that kind of a scenario?
Well, I think, from the Fed's point of view, the FOMC's latest dot plot basically calls for one more rate cut in the new year. And when we look at market pricing, the market is expecting 2 rate cuts. I think these expectations are quite reasonable. I personally would expect, somewhere between 1 to 2 cuts. But of course, the swing factor is going to be the new incoming Fed chairman. So we still don't know who that person is going to be. If that person is going to be more aggressive, pushing for more rate cuts, of course, the scenario will change quite materially.
Okay. Just your forecast for the currency here, Patrick, the rupee, dollar rupee?
Well, I I think, there's still a lot of uncertainty around, the future direction on FX, mainly because, everyone in Asia, not just India, is being held hostage by the overall general direction of the dollar. Obviously, like what we have discussed, if the Fed becomes more aggressive in cutting rates, the dollar sentiment would change, and it would help not just the India rupee, but also Asia FX in general. But then, in the end, the Fed, is kind of moving very slowly. Then, I think it would be a struggle for Asia currencies to appreciate.
Yeah, got that. Now, just last thing, Patrick, commodities, right? Where do you stand on, let's just take precious metals if you have a view into 26, and then we can talk about some of the base commodities.
Well, I think, on commodities in general, there are, divergence for sure. If we look at oil price, there are many, many reasons, to suppress oil price going forward. But of course, on the precious metal, the story is completely different because the demand for gold and silver is not just based on industrial demand, but also based on demand for safety. So, I think we will continue to see some divergence across the commodity space into the new year.
So bullish gold and silver, not so much the basic commodities. But I mean, we are hitting highs there as well. Look at what's happening with copper, look at forecasts there, aluminum, for example.
I would agree. But like I said, if the demand on the some of the commodities are not purely based on industrial demand, but based on other demand as well, then, those commodities can continue to rally.
Patrick, leave us with like leave us with like a non-consensus view, if you have one, across your area of expertise. What you think will happen, which no one expects will, in 2026?
Well, I would say that the market has some expectation that the incoming Fed chair will try to push interest rate lower. And as a result, the dollar can resume a downtrend. So I would say the out of consensus call would be the incoming chair would find it very difficult to push the Fed as a whole to lower interest rates more aggressively. And as a result, the dollar actually doesn't go down. If anything, it can go up. So that would be a very out of consensus call.
Okay, that's interesting. Thanks very much, Patrick. We'll leave it there. Appreciate you joining us. Great chat, and look forward to speaking with you again in the new year.